like, what are some differentiators of credit unions, how they do business differently, and some unique opportunities at DUCA through its Impact Lab to get paid faster. So the objectives for today, we're going to build some understanding of credit unions and why they are unique banking partners, give you a tangible sense of the product and service offerings at DUCA. Who is DUCA, you may ask? DUCA is a credit union. We've been around for over 60 years. And our mission is to help people do more, be more, and achieve more with their money and their lives. We were started over 60 years ago by a group of newcomers to Canada who didn't have access to banking. They weren't able to get loans. They weren't able to open bank accounts, so they started their own bank. And that first year, I think we had about $250 in loans, and this year we crossed over 3.4 billion. So we've come quite a long way. We offer a full suite of financial services, both digital and in person. One of the fastest growing credit unions in the country, and we're located across Southern Ontario with 16 branches from Guelph to Bowmanville, and including the city of Toronto. So a lot of people don't quite know the difference between credit unions and banks, or think they know, but don't know the full story. So I want to clarify before we dive farther into the content. The biggest difference between banks and credit unions is not necessarily the services that are offered, it's really the ownership structure. So credit unions are cooperatively owned, and whereas big banks are generally owned by shareholders. The difference is in the interest of the shareholders with respect to the people that actually bank at those institutions. When you start to think about what that actually means, so you can think about it in terms of the fees you pay, the rates you get, and also your ability to share in the profits generated as a result of your decision to bank with that institution. So for example, if a credit union is owned by the people that bank at the credit union, those people are much less likely to pressure management to have things like high fees and low rates on deposit. They are going to pressure management to have low fees and high rates on deposit, and they also want their fair share as shareholders in the credit union of the profits that are generated by the institution. Whereas big banks have shareholders that aren't necessarily customers of the banks. They are individuals and entities that want to see the banks make their profit targets for the quarter, to meet forecasts, and to generate generally as much money as they can off the people that bank with the bank. So a very fundamental difference, and it's really related to ownership structure, not necessarily product and services available at that institution. A big difference in how that manifests itself at DUCA is that we don't have customers, we have members. And they have a say in how we operate. Like we said, everyone that banks at the credit union is an owner of the credit union, is a shareholder of the credit union. We refer to them as members. And it's our responsibility as the DUCA management team to be accountable to those members. And we are accountable to those members through a board of directors that is elected from the membership base. And they oversee how we operate as a credit union, our risk management, our direction as a business, and our management's performance. The management is responsible for delivering a member experience in line with those expectations. And it forms a nice little virtuous circle, as you can see in the diagram. But the real point is that people that bank at the credit union have a real and meaningful say in terms of how the credit union is run, the direction it's headed, and how it offers services to the people that bank with us. One of the big differences you'll see at DUCA, for example, is how our members are able to participate in the value generated by their banking activities. So the profits earned by that credit union that they bank with. In our case, we've returned almost 50 cents of every dollar ever earned by DUCA back to our members. We have a profit sharing program, and it has, like I said, returned almost 50 cents of every dollar ever made by DUCA back to the members of DUCA. The rest of that money gets invested in the credit union so that it can increase its capacity to serve our members, invest in technology, and continue to evolve and run as a business and offer an excellent member experience to the people that bank with us. A driving principle of our decision-making at DUCA and the experience that we offer to our members is our profits with purpose philosophy. So this is built around a recognition that there's only so much household income available to cover expenses and to contribute to society in the way that our members want. So what we wanted to do is create a banking model that aligns our everyday purchase-making decisions and our everyday banking decisions with our desire to do good in the community and to have a positive impact on society and align our interests with how we spend our money. And that's what we're seeking to do at DUCA, and it drives much of our decision-making as a financial institution, and it's produced some really interesting initiatives that make us pretty different from what you would find at the average financial institution. Some examples of that are products that create change. So for example, we have Canada's only social purpose mortgage. We call it the Community Hero Mortgage. It operates just like any other mortgage available on the market. It pays 0.2% of the interest paid by the mortgage holder gets paid to Habitat for Humanity so that they can turn around and build affordable housing space for working low-income families that need safe, affordable, and livable homes for their families. So by virtue of making your mortgage payment, you're creating a housing option for someone else, which is a pretty unique model, and I believe the only one in Canada that operates quite that way. The 0.2% interest is paid entirely by DUCA. The mortgage holder doesn't pay anything extra to participate in that program. It's paid at DUCA's cost to Habitat for Humanity, so it's a really great deal for the mortgage holder and doesn't result in any extra cost or fees for the borrower. In terms of community involvement, we have a longstanding policy of contributing 3.5% of pre-tax profit per year to community groups and organizations through our philanthropy efforts. That, if you follow corporate giving in Canada, that's 3.5 times the Imagine Canada Caring Company standard of 1%, which most companies have a hard time reaching. The other piece is that we want to not only contribute to community, but take a leadership position on things that matter to us and make sure that our employees can participate in the community the way they want to. That was kind of the driving force behind DUCA becoming Toronto's first living wage employer back in 2014. And we are still paying, so that essentially means, if you're not familiar with the term living wage, it flips the script on what your lowest wage earners can earn from what is the minimum you can legally pay, which would be the minimum wage, to what is the minimum someone would have to earn to live a basic standard of living in the communities that we operate. So in Toronto, a living wage was calculated to be $18.52. We worked on that calculation with a range of community groups, labor organizations, and government stakeholders to come up with that $18.52 number. And that $18.52 number reflects basic costs of living. So if you're a family of four, what would it cost you to live for the year? And what would that figure be if you were to break it down on an hourly basis? And that hourly basis figure is $18.52. So $18.52 covers a basic standard of living like rent, food, transportation, utilities, just really basic costs for a family of four. Childcare is another example. All that's built into that 1852 number, but the living wage calculation tells us you have to be earning at least that to cover all those basic costs in the city of Toronto. And DUCA has aligned its pay standards with that rate. We evaluate our social and environmental performance using the B Corp certification tool. We are the first credit union in the world to become a B Corp. And a B Corp is a company that not only prioritizes social performance, environmental performance, but also it has actively pursued that agenda. So a B Corp certification is one where companies are audited by a nonprofit called B Lab against best practices across different categories, like how they treat their workers, how they manage their environmental impact, how they interact and add value to the community, how they structure their products to create social value, and all those types of metrics is quite an extensive assessment. And DUCA was the first credit union in the world to be certified as a B Corp. So when it comes to business banking, DUCA offers a suite of banking services, much like you would find at most financial institutions. But of course, we have our own spin on it. So we have things like no or low fee banking, payment services, lines of credit, payroll services. It's really in a designated small business advisor, which is really important, and I'll speak to that in a second. So, like you would find at banks, we have lending, we have bank accounts, we have small business services. But because of our mission to help people do more, be more, achieve more, and because of our operating structure as a credit union that is owned by the people that bank with us, really prioritize the advisory piece. And all our business clients would have access to a small business advisor who's experienced in business banking and can anticipate your needs and challenges, but can also advise on product offerings unique to your business and create a custom strategy and custom set of recommendations that will help you reach your goals and help you do more, be more, and achieve more. That advisor is mobile and readily available to you as a business banking customer at DUCA, and a really key piece of our value proposition as a small business banker. So in terms of what you can have access to as a business client of DUCA, we have accounts and different account bundles depending on what your business situation is and what the best fit for your business is. There's lending options like business line of credit, business loans, business mortgages, payroll services, payment services that you can utilize, and really kind of what we feel is a fairly comprehensive suite of business services, especially when you combine it with the advisory piece with our small business advisors. The other interesting thing about DUCA is that we actually have a nonprofit solutions hub called the DUCA Impact Lab. And it runs, I'll explain a bit about what the DUCA Impact Lab is and also what it does, because there is a pilot running in the Impact Lab right now that is particularly innovative for small businesses that maybe don't have access to lines of credit or traditional forms of financing. So I'll speak to what that is in more detail. But the DUCA Impact Lab is set up to answer the question of what would banking look like if all it was about was solving problems and creating opportunities rather than simply creating profit. When you think about how DUCA was formed, we were formed by people that didn't have access to the banking system because they weren't able to send the right signals to banks that they'd be good banking customers. But if they weren't good banking customers, I wouldn't be sitting here talking to you. There wouldn't be a DUCA if that was the full story. It turned out that they were very good banking customers, and we wanted to reflect on that and build some space for really exploring and recognizing that, okay, if those signals were imperfect then, what signals are imperfect now? And if the signals are imperfect, can we find a better way of a better set of signals that allow us to figure out who should get access to credit and under what terms, and broaden the reach of our ability to help our members and our communities. So the DUCA Impact Lab is set up to do just that. It's a place where we can convene conversations on inequities in the financial system, convene conversations on gaps in service in the financial institution, among financial institutions, and bring together a community of innovators, experts, and stakeholders from the community to identify, test, and champion solutions to those problems. One such solution that is being piloted in the Impact Lab right now is a working capital financing program for underbanked entrepreneurs. So when we were figuring out what we wanted to do in the Impact Lab, we spoke to a lot of small businesses, a lot of social enterprises, a lot of companies that generally don't have great access to lines of credit and other forms of small business financing. But we also found that they don't actually want debt financing, nor do they want to sell off a piece of equity in their business. But they do have very real cash constraints and very real working capital needs. So what we came up with was an invoice factoring program where companies in those situations can sell off portions of their receivables to the Impact Lab. The Impact Lab will buy invoices that they have on the table with their clients, and it's really geared towards companies that work a lot with institutional buyers, like universities, hospitals, governments, large corporations that generally have long payment cycles. If they have an invoice, for example, social enterprise catering company that does work for a university. You know that the university is going to pay them, but to get to the point where you can invoice for that work, you have to buy the food, you have to pay the labor to prepare it, you have to pay your staff to serve it, you have to incur all these costs to get to a point where you can even invoice for that work, at which point it goes into that university's accounts payable system, and it could be, in many cases, months before that work is paid for. But in the meantime, you still have to make payroll, you still have to run your business. So that period of time where you're waiting to get paid can be a real hindrance in terms of how you're able to operate and manage your enterprise. So what we've come up with is an invoice factoring scheme, and if you're familiar with invoice factoring, it can be a quite costly source of financing. But what we're saying is that we don't actually think it should be that costly, and that we'll buy 100% of your invoice up to $25,000 and that you can repay us over a 12 to 24 week term, depending on your particular cash flow constraints, at a rate of 0.0375% of the invoice value per week, and you can repay that. You can repay that advance at any time with no penalty. So if you get paid unexpectedly early, and you want to just settle the amount owing to the DUCA Impact Lab, you can do so at any time with no penalty. So it's a very low cost way of financing your working capital crunches as a small business. We've had great uptake on the pilot so far, and we'd love to have more small businesses participate in the pilot. So if you're interested, you can contact me directly, and we can have a chat about what your business is, what you're hoping to do, and we'll move you forward in the right direction. Thank you for your time, and that is the webinar for today.